If you give me just a few minutes, I'll show you one of the most accurate and underrated tools on TradingView. One that turns raw volume data into powerful momentum signals. This isn't just another basic volume oscillator. This is a unique volume-based trend and reversal system that, when used properly, can help you catch clean entries, avoid fakeouts, and stay aligned with big moves. So stick around, because I'm going to quickly show you two powerful strategies, one for reversals, one for trend following plus real trade examples. Let's get into it. So first, go to TradingView. I will also be using TradingView for this video. And then click on the Indicators tab from here. In the search bar, type Dynamic Volume Profile Oscillator. You'll see it is created by alpha_NATT and tagged as editor's picks. Once you add it to your chart, it'll appear as an oscillator panel below your price chart. Now quickly, what makes this thing special? At its core, this indicator transforms volume analysis into a dynamic oscillator by using a real-time volume profile and measuring price deviation from volume-weighted levels. That means instead of just looking at candles and volume bars separately, this tool fuses them together and outputs a dynamic signal line that shifts color and direction based on trend strength and momentum changes. You'll notice the main line in the oscillator shifts between blue and pink. That color alone gives you a quick view of momentum: blue for bullish and pink for bearish. But we don't just trade color. The real magic happens around the adaptive center line. This center line isn't fixed. It moves with volatility and market conditions, which gives you a much better read on momentum shifts compared to static midlines. So here's the logic. When the oscillator crosses above the center line, it signals increasing bullish momentum. Buyers are in control. When it crosses below, it signals growing bearish momentum. Sellers are stepping in. But, and this is key, we don't blindly treat every crossover as a signal, because these shifts can happen during pullbacks. So instead, we use the oscillator for confirmation within a larger trend context. Let's quickly talk about short-term and long-term momentum, even when the oscillator is sitting above the center line. Its color may shift from blue to pink. That's a signal that short-term momentum is turning against the longer-term trend. The same works the other way. Pink line turning blue could mean downside momentum is weakening. But for cleaner signals, we focus more on the crossovers and use other tools to filter false signals. The indicator also gives us an upper and lower boundary, marking extreme zones. When the oscillator crosses above the upper zone, it doesn't always mean overbought. In fact, sometimes it signals strong breakout momentum. But if you see it extended in that zone for a while and then curving down, it can signal a pullback or reversal. Same logic for the lower zone. If it dips below and starts flattening out or climbing, that's often the first clue that downside pressure is weakening in the market. Now here's where this indicator becomes deadly accurate: divergences.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
If the price makes a higher high, but the oscillator makes a lower high, that's a bearish divergence. And if the price makes a lower low while the oscillator makes a higher low, that's bullish divergence. These setups are extremely powerful, but only if confirmed properly. Let's break that down. In a bearish divergence setup, price pushes higher, but the oscillator fails to follow. That's your clue that momentum is drawing up. But we don't just jump in. We find the swing low between those two highs, mark it, and wait for a candle to break below that level. That break tells us the bullish structure is violated, and now we have both divergence and price action in sync. At that point, we can open a sell position, place the stop above the most recent swing high, and aim for a clean 1.5 risk to reward setup. The same logic for a bullish divergence. Price makes a lower low, but the oscillator shows a higher low. Mark the swing high between those lows, wait for the breakout, and enter the buy trade. That combination, divergence plus structure break, is what separates high probability setups from noise. Now, let's take this even further with a second strategy, a trend following system using MACD. This will help you filter the oscillator signals and only trade in the direction of the bigger trend. Add MACD to your chart from the Indicators menu. You can do that from here, and I hope you already know about this indicator already. Zoom in its settings, first of all, from here, and change the fast length to 100, slow length to 200, and signal smoothing to 50. In the Style tab, remove the MACD and signal lines. Just keep the histogram. This custom MACD setup will now act as your trend filter. When the histogram is dark green, we're in an uptrend. When it's dark red, we're in a downtrend. Light green or light red bars suggest momentum is fading and we should be cautious. Now, let's combine that with the oscillator. When MACD is dark green and the oscillator dips below the center line but then crosses back above it and the line is blue, just like we can see over here, that's your buy signal. As long as MACD confirms strength, we can enter the buy trade. You can set stop loss below recent swing low. And aim for 1.5 risk to reward. Whenever you're taking a buy trade with this strategy, always check the shape and slope of the oscillator line. If it crosses above the center line with a strong upward angle and turns blue immediately, it's a strong signal that bullish momentum is accelerating. But if the crossover is flat or hesitant, it's better to wait for more confirmation or skip the trade, because weak momentum often leads to choppy price action or fakeouts. Let's go through one more buy example. After that, we will also go through one sell trade example. So here we can see the MACD histogram is dark green, confirming uptrend. The oscillator had pulled back below the center line and then crosses back above, turning blue. That's our entry. We place the stop just below the swing low and ride the trade up to our profit target. A tip here: if price action shows a strong engulfing candle or breakout bar right at the oscillator crossover, it makes the signal even more reliable. Now, a full sell example. Here we can see the MACD is dark red, confirming downtrend. The oscillator line was above the center line and then sharply crosses back below, turning pink. At this point in time, the MACD is still dark red in color. That's our entry trigger. We can place the stop loss above the recent swing high, and the take profit target can be set at 1.5 times our risk. If we get a clean rejection from a resistance zone at the same time, that adds more confidence. One final note: this strategy, while powerful, isn't immune to losses. No indicator or setup guarantees a win. You must always use proper risk management. So that's it. If you use the Dynamic Volume Profile Oscillator the right way, with either divergence or trend confirmation, it can truly level up your technical analysis game. If you found value in this, make sure to drop a like, subscribe, and turn on notifications so you don't miss more advanced strategies like this. Thanks for watching the video. Till the end, I'll see you guys in the next video.